Hello dear traders, I'm Anna Kosatkin and welcome to InstaTV News channel. The Central Committee of the Chinese Communist Party began its 5th annual gathering yesterday. The plenary session will be over this Friday. Many experts are closely watching the meeting amidst the recent signs pointing to China's economic meltdown. At the plenum in Beijing, members of China's ruling party led by Xi Jinping intend to formulate the next 5-year plan, outlining the country's social and economic development. By the year 2020, which is the end of the project's time frame, China is set to create a moderately prosperous society. How exactly this step will be accomplished and what reforms need to be implemented in order to improve the welfare of the Chinese population, these are some challenging questions that the global investment community now ponders upon. The last report on China's GDP growth rate revealed that during the third quarter, domestic consumption acted as the main driving force for the expansion of the Chinese economy. That is exactly what the government is trying to achieve. In this slide, the reading of 6.9% can be perceived as a positive change. Nevertheless, the decision made by the People's Bank of China to cut its key interest rate by 25 basis points looks somewhat confusing. Does it mean that the Chinese regulator, given that it took such radical measures, is dissatisfied with the transformations that occur in the Chinese economy? Worries over the inconsistent actions of the country's monetary authorities dented investors' appetite for risk as they switched their focus to safe haven currencies. Thus, the Japanese yen is paring losses against the US dollar in a confident manner. Today, in the European pre-market trading hours, the pair advanced to 120 yen 40 cents per $1. Currency strategists have reviewed their projections and now advise traders to resume bullish bets on the Japanese yen and the single European currency versus the greenback. Experts at Greedy Agricole take into account the weak macroeconomic data recently published by the US statistical agencies. However, they expect that the Federal Reserve will view these figures as a temporary downswing, so the downbeat statistics will be unlikely to hinder the start of monetary tightening in the near future. And yet, experts still suggest that any sign of short-term weakness in the euro and yen should be perceived as a chance to purchase these currencies at a favorable price. And this was Daily Financial News on InstaTV. See you back soon. Bye.